And now the survival show that once survived the cauliflower craze. In this episode, we sit down with your buddy, Joey King from bitesofman.com. We discuss what the heck is going on with cryptocurrencies and what the future may hold. Howdy and welcome to In the Rabbit Hole's Urban Survival Podcast. This is episode number 266. I'm your host, Aaron, and you are in the rabbit hole, safe and sound. Here's the thing, you're about to listen to two guys on the internet talk about what is essentially money. So here's your big warning. Do your own homework. Invest in things at your own risk. This is for your entertainment purposes only. We are not giving you financial advice. I am not responsible for the shenanigans you get up to. In fact, I might not even be wearing pants. Again, guys on the internet talking about things, you've been warned. Now, with that super airtight legal disclaimer out of the way, Joey, welcome back to In the Rabbit Hole.
Hey, great to be back.
Yeah, so it has been not quite a year. I think it's been 10 months since the last time we had you on, the last time we talked about this. And of course, with cryptocurrencies, a ton of things happen. Heck, a ton of things happen in a single day with cryptocurrencies sometimes.
Right.
So let's start here. It's been 10 months. What's the most important or most significant or even interesting story that's going on with cryptocurrencies right now?
I'd say the prolonged bear market's probably the most significant, most interesting.
Mm-hmm.
And then, my personal bias, I would say the continued divergence between Bitcoin Core and Bitcoin Cash in terms of where they think the future of cryptocurrency is going to be.
Okay.
As it plays out through that bear market.
Mm-hmm. I'm glad you brought that up because I think I looked it up right before we got on. And the last time we spoke, let's see, Bitcoin, when we spoke, was at 8,099, and now it's 6,491. And then let's see, Bitcoin Cash was 1,245. Now it's 447. And then like Litecoin was $72 and is now $57. So what's been suppressing the values? Like it took a nosedive and then it just kind of is.
So I guess the other point is Bitcoin Cash today is actually up 20%. It's about 520 right now.
Oh, is it? Well, that's what happens in an hour.
The last price check, right?
Yeah, exactly.
And then the other part, I think when we first had those valuations in our last podcast, that was actually on the way up. Mm-hmm. And that was when, Bitcoin Core BTC was at 8 on its way to 19.9.
Yeah.
And Bitcoin Cash was, 1,200 on its way to 2,400 and blips of like 3,500-ish when they finally launched on Coinbase. Mm-hmm. And, even Litecoin, I mean, what was it? It got to like the 300s or something like that.
Yeah, I think it got up into the 300s.
So, I mean, in between the last time we talked and now, like there was obviously a bit of a bull market and a bubble. So that's part of the decline, right? Things rising so far and so fast with pretty much every asset. It's typically not sustainable. And with cryptocurrencies, like we've already seen unsustainable bubbles come and go several times before at much less interesting orders of magnitude as far as investors and the media are concerned. But, Bitcoin went to $30+ and then back down to like $2. And then the most significant mainstream media, at least bubble before this last one, was when Bitcoin got to $1,200. And then in the wake of Mt. Gox and everything, kind of slowly dwindled down to under 300 for a while, before just sort of riding an entire year between 220 and 350 or so, before that last halvening, and now kind of coming back to the last bull market we saw. And now we're after that in this bit of a bear market. So in terms of the valuations, nobody really knows what this stuff is worth yet anyway. Mm-hmm. I think all of the bubbles so far have still been based on speculation and speculative valuations in terms of, okay, well, what could this be worth based on this type of potential use case? Mm-hmm. And I would say that particularly for some of the smaller altcoins and stuff like Litecoin, a lot of people are getting in saying like, oh, okay, well, this stuff tends to go up further and down further in percentage times. It has this kind of self-fulfilling prophecy of like, oh, it's higher risk, higher return. Maybe it's the speculation, but that's why you're getting into it. Like, that's not true for people who bought lots of other assets last November, December, that are just sort of disappearing now. So I tend to think that the fair market value of this stuff is going to depend on utility
Hmm.
and, to a certain degree, inelastic demand. People needing cryptocurrencies for things that they could not do with, say, US dollars or other currencies. And I think that the long term price is going to be a function of that certain residual baseline demand. And for all of these crypto projects, that's still incredibly low.
Hmm.
I would say it's still growing. I would say it's still exponentially growing, but the market for people playing poker with Bitcoin Cash, or for people saving 30% on Amazon at Purse.io, also with Bitcoin, is still super small compared to the size of the retail investor market slash speculator market on cryptocurrencies. So even though we're in a bit of a bear market, in terms of the actual present utility today of cryptocurrencies, everything's probably still overvalued.
Mm.
Uh, it's just we've seen a collapse at a supported speculation price base from last December.
So, that's really interesting that you brought up utility, because that was one of the things I really wanted to ask about today. Because I know when I heard Amazon, I guess this was about a year ago, that Amazon was looking seriously at introducing, at the very least, Bitcoin to their payment options, and then just nothing happened with that. And then I've heard like they've struggled with trying to figure out, well, how does it work if somebody wants to return something? Do we give them it back in US dollars, or do we have to give it back to them in
Right.
whatever crypto and in the same amount of crypto? And apparently it's caused like just a real headache for them. And I mean, if you're a small business, it's not that big of a deal unless there's some truly massive spike or dip in the market that day. But if you're Amazon, where, shaving 5 cents off of a single item, or over, the course of every single transaction you do in an hour, I mean, that can be huge money. So I could see where what's been your take on, and just using Amazon as an example, just the general utility?
Yeah, so the general utility right now is this emergent thing, and it's coming from small innovators. And I
Mm.
don't think we'll ever see these large players
Oh, wow.
try to incorporate it. I
Mm.
think that'll happen once there's enough infrastructure and once there's a reason for them to do it.
Hmm.
But for example, like with Amazon, um, I use a service called Purse.io.
Hmm.
I don't work for them or anything, but they are just a marketplace, and they match people who want Amazon products with people who want Bitcoin, and they take Bitcoin Cash now. So you just post what you want on Amazon. You can select your discount. Um, I think by default they'll fulfill anything that's 5% off, but I usually get 30% off, no problem.
Huh.
And you put your money into escrow, and then somebody on the other side of the world, probably who has an Amazon gift card or some reason that they're okay with buying this Amazon good for you at this discounted price, picks up that order. And then when you receive your product, you say, yeah, I got it. And you pay that person in cryptocurrency. That person, you review each other and you move on. So
Huh.
Amazon's not even involved in that transaction, but it is. It's a company. They're based in San Francisco, right? They like have an office, all legal.
Mm.
And that's sort of also a metric of how low this use is right now in the general population.
Mm.
That you have some people into cryptocurrency who are like, yeah, my lifetime expenses on Amazon are just 30% lower than everybody else's because I use cryptocurrency.
Wow.
And the rest of the world is still like, yeah, I have no idea about that. Not even looking into it.
Mm.
But what you're seeing there, the Amazon thing is an example, is that there's always this market spread between the value of gift cards and the value of money. And that's why so many of these big companies, right, that are slow to jump onto cryptocurrency immediately jumped onto gift cards. Because if you're a Fortune 500 retail company, selling gift cards is just printing money for yourself, right?
Hmm.
So not all of them are going to be redeemed. You're just giving people this piece of plastic, and every time you do that, only a fraction of them are used. So you as a company love it. That's why all these companies got into gift cards immediately, right? They
Hmm.
immediately had something to gain from it. But from the cryptocurrency side and from the user side, right? Like if you get a Home Depot gift card or an Amazon gift card or a Starbucks gift card, if it's a $20 gift card, you'll never be able to sell that for $20, right? It's not as useful as the actual $20. But wouldn't it be nice if there was a total international market for you to convert between gift cards and currencies? If only there were some way, then you could have a mechanism for the free market to discover what exactly is that price difference between the value of a $20 Amazon card and $20 cash. Because now you could be selling that, say, Amazon gift card to anybody in the world, and maybe it's somebody who immediately wants to buy it on Amazon anyway. So the more people start participating in that market, you'll start seeing that spread disappear. And Purse.io is just one application that's doing this. People have tried this before with other apps in the past. There's one called Fold app that did the same thing with Starbucks gift cards. And people are still looking at it now. To my understanding, the main obstacle is just regulation and size of the market, right? Even if you're giving 20% off, there's just not a lot of people out there who use cryptocurrency enough that are like, no problem, I'll just open up my wallet and do this transaction. People are still just like, nope, swipe the credit card. Don't even think about it. So it's an example of what I think is a really important use case. And because so few people are using it now, you have a real and tangible benefit as an individual consumer, right? 30% off Amazon is no joke. However, the big companies don't really have the same real and tangible benefit the same way they did, for example, issuing gift cards. Smaller businesses do, just because dealing with credit cards for them is a giant hassle, right? It takes them forever to get their money. They have to deal with all the chargebacks. But even the smaller businesses that do, they would only accept cryptocurrencies if their customers were using it, or if they, for political reasons, just liked it.
Same reasons I got into it a while back. And instituted it in a store.
That level's still really low. I think that shows us kind of the baseline utility level. But right now, that baseline utility level is like people who politically disagree with the US dollar trying to trade with other people who politically disagree with the US dollar. And I think that's a growing use case. I think it's a fantastic use case. I'm not sure if it really justifies, billion-dollar market caps or $100 billion market caps just yet. However, I can see people speculating, probably intelligently, that more humans in the future will feel like that or be forced into that type of an arrangement. If you start seeing, the US dollar lose reserve currency status, or you start seeing reliability and transparency in monetary policy just strongly outcompete the US dollar on something like Bitcoin Cash. So that's where I think you'll start seeing the real use. And then even today, right? Like, think about if you've ever bought something on the internet, which a lot of people do now, you've had to use a credit card. And that process is, it's a little easier now than it was in 1998, but it's really not that easy. And it's not that much easier, right? You're still sitting there like, oh no, like I changed my address. I got to like pull this up, type the numbers in. Okay. And the expiration date and my name. Okay. And then this. Oh, there's a fraud alert. Okay. Well, I got to call my bank on the phone. It's just a massive hurdle rate that so many consumers just put up with it because they're like, yeah, well, it's just how you buy stuff on the internet, and like, I'm not going to go to a store because that would be awful. So I'm still going to do this. So that's another potential use case of like, well, if there were a way to buy stuff on the internet that's better for people who sell stuff on the internet and better for people who buy stuff on the internet, that lowers costs for everyone and increases utility, maybe that would start to eat into the business model of, say, PayPal or Visa or all of these people who, by the way, they charge you massive fees for the privilege of having to call them every month and say some transaction was actually what you wanted to do. So that's also just a massive potential use case that, because it's such a large social change and large economic change, it hasn't really hit home yet. And I don't know if that will hit home soon, right? Because like 30% off on Amazon seems like it's something that would hit home, right? And almost nobody does that. So I mean, I hope people on the show go check it out. And I hope, stuff like that is what's going to really build the inelastic baseline demand for cryptocurrencies, is people trading each to their own advantage and each making some profit from it.
Yeah, I've run into that because I remember a while back when I first tried to, the first time I tried to institute it on an e-commerce system, it was a big pain. And I had to go shopping around for a while to find somebody with any experience at all in doing it. That was also a really big e-commerce system, so it was a bit understandable. But
Right.
even now, just running WooCommerce on in the rabbit hole for t-shirts and hats and flashlights, I
Mhm.
cannot, like, there's some plugins out there, but they're not plugins from reputable companies that it's like, oh, I know who that is. I trust them to handle financial transactions on my website and not be skimming off the transactions or selling it to,
Right.
I don't know, Russian hackers or something weird. So yeah, and then trying to get into, especially with like the membership program, which has a subscription model, trying to handle that with cryptos is, yeah. So I'm somebody who loves cryptos and thinks they're wonderful and can't put them out there and use them, the real utility of them in
Right.
being able to conduct commerce. So yeah,
But
it's
that again, it's still hard today, but that's changed a lot
yeah,
since 2013
yeah,
to today, and since some of the prior crypto bubbles, right?
yeah.
I like Shopify, like the Bitcoin store, store.bitcoin. Or the Bitcoin.com store, store.bitcoin.com is just on Shopify, and they
Mhm,
work through BitPay to accept Bitcoin, Bitcoin Cash. And BitPay's whole business model is they'll just pay you off in the local currency, right? So if
mhm,
you're running a store and you use BitPay as your payment processor, I think what credit cards, who knows what fee they charge? They charge you, I think, substantially lower than the credit card fee.
mhm,
And then you, as the business owner, decide how, like, what percentage of the cryptocurrency that you accept would you like to keep,
mhm,
or would you like to just receive it all in US dollars? So you can say 5% of my crypto sales I want to stay in Bitcoin, or you can say, well, no, everything should just be US dollars because it's an accounting hassle and I don't want to have to carry this stuff or whatever.
yeah,
And before, there weren't companies that could do that.
mhm,
It would be like, okay, well, here's the transaction. I trust you, guy on the internet. You trust me, and maybe we'll rate each other or have a reputation system. So,
yeah,
but to your point, right? It's way better than it used to be, but it's still not great.
yeah,
There's still a long way to go. So I can see why, like, speculatively, it's easy to say cryptocurrencies should be worth more today than they were a year or two ago,
mm,
since a lot of concerns have gone away, right? I mean, cryptocurrencies, even 3 years ago, it was like, is this really going to work? Has this really been tested? What kind of attacks are possible on this? And some of those, I'll just call them like the major existential risks, are starting to become a little more understood by the market.
mhm,
So you're no longer speculating on, like, is cryptocurrency a thing or not, in the way that you were maybe if you bought in 2012.
yeah,
Now you're speculating on, like, okay, well, who's going to have the most utility and demand and the biggest community and the most defense against attackers and all of that stuff 5 years from now, 10 years from now. And what are my kind of pot odds on betting on that today versus whoever is going to come along in the future?
yeah. So, from a practical sense and from a percentage, how much of your life would you say you actually pay for in crypto?
Oh, I mean, 100%.
Oh,
Like,
wow.
although, my income is in Bitcoin Cash. So
Yeah.
that is, puts me in a weird default. And then it's kind of not a fair answer to your question, right? Because I'm like, oh, it's all with crypto, except, I have to also buy a lot of US dollars from my bank to pay my credit card bills. And I have to buy Canadian dollars from the exchange here to pay my landlord. And so, for practical purposes, the people who I work with in crypto exclusively, my guitar teacher, um, I'm still trying to I'm taking voice lessons. I'm trying to bring him on board, but he's a
Uh,
little cagey about it, but he seems receptive to it.
uh-huh.
And my sailboat repairs, I paid for about half my sailboat repairs with Bitcoin Cash.
Oh, wow.
Um, but, guitar teachers and sailboat repair people, like, they're amenable to the idea of fiat currency as a giant scam.
Mm,
So the people in my life who are amenable to that idea, I trade Bitcoin Cash with them.
mhm,
But in other parts of your life, like the Starbucks cashier, even if that person does think fiat currency is a giant scam, they're not in a position to accept your crypto, so it's irrelevant.
mm.
It's much higher today though than it was a few years ago. I went to a store. I really wanted one of those old timey telescopes
Okay.
where you extend it for my sailboat.
Yeah.
And I never found one. I wanted an hourglass too. And on Amazon in America, you get whatever you want, but on Amazon in Canada, like you can't. The selection's a little worse. But I was still walking down the street in this town in Canada called Penticton, and there was this store, and it was just like house of antique hourglasses and old timey nautical telescopes. And I was like, you got to be kidding me. And I go in there, I'm like, this is exactly what I want. These two things. I'm wearing a Bitcoin shirt, and the person at the cash register was like, oh, we really want to accept Bitcoin for this stuff. Can you show us? I was like, you guys are kidding, right? And we went through the whole thing. I explained and set them up with a wallet and then paid for everything. But that experience was unheard of, in 2013.
Yeah.
That was when you had weird nerds like me going to stores being like, oh, hey, like, do you accept Bitcoin for this? So it was really kind of validating to have it the other way around. Somebody being like, oh, whoa, like we've wanted to do this for a while for our own reasons. Show us how.
Yeah.
So I think you still have this level of growth, and it's bigger than what it used to be, but it's also still ridiculously small.
Yeah.
I don't think it's slowing down though, even with this current bear market. I think it is still accelerating, and it's easier for people to get onboarded now than it was in the past. So the next cycle, wherever that is, I think you'll see even more dramatic returns to these all-time highs.
Oh, cool. And that was going to be one of my other questions as far as like, is the technology, like the general use technology getting like wallets, are they getting easier?
Absolutely.
Okay.
Yeah. It's still not convenient because it's not what people are used to. So you're still asking for a big change, right?
Mm-hmm.
It's different than getting cash out of an ATM. It's different than swiping your credit card. Compared to credit card use, I'd say it's easier, but it's not the same. And one of the big kind of conversion hurdles you face is just people are super, and rightly so, skeptical about anything that you say is money if it's not what they've been using as money.
Yeah.
And it's really weird, I think, for us, like living in the time we're living in today, because everybody thinks that total garbage that's not money at all is money.
Yeah.
And real stuff that actually is money, people are not sure what to think. And that includes stuff like gold and silver, right? Stuff that's like very clearly money with thousands of years of history. And people are like, no, like that's not a credit card. So you're facing a lot of kind of uphill battles in terms of adoption and simplicity. I think it's way easier. I think it's easy enough already to compete with credit cards. Like I use crypto to buy stuff online at least a few times a week, not even using purse.io. And it's way easier to, you just put in your email address, pull up your phone, scan a QR code, it's done. It gives you an immediate notification versus like, oh no, like I don't have an account here and they need my billing address and this card. But I'm doing this from Canada and it's American credit cards. So sometimes it's not, it's already easier than credit cards.
Huh.
So the real conversion rate or the conversion difficulties in getting people into crypto is the idea that this is real money. I think that's still a bigger block than technical ease of use.
That makes perfect sense. The psychological barriers to changing a behavior, changing a way of doing things. That actually makes perfect sense to me. Now, we brought this up in the beginning. There's still stuff going on in between Bitcoin and Bitcoin Cash. So what's the latest there? And tell us about that. What's the latest from the war front?
So I'm a Bitcoin Cash partisan. Yeah. I'll say that openly. Like I work for Bitcoin.com. We're big supporters of Bitcoin Cash. We believe that that's the best path forward for increasing economic freedom in the world. We think that Bitcoin needs to work as cash for that to happen. And because Bitcoin is money, it gets very political. Everybody has some sort of a stake or some sort of incentive in selling you on why what they personally prefer is actually the best thing. And nobody's really an exception for that, right? So like I have totally a vested interest in shilling Bitcoin Cash and saying it's great. So you shouldn't really just believe me because I say it. You should maybe look into some of the facts or some of the reasons behind that, and figure out for yourself like where you're at on that scale. The most recent news in this, Bitcoin Core, I think, has very effectively used narratives, political narratives, to sort of shape how it's perceived and try to keep some of the momentum of its reputation. And one of those narratives has been that Bitcoin Core has the best developers in the world. They're invincible, they're godlike. Anything that doesn't have a Bitcoin Core developer stamp of approval is a scam by default because you didn't have this wizard dev on it. That's been a persistent narrative from Bitcoin Core. Recently, there was a pretty big bug discovered in Bitcoin Core by a Bitcoin Cash developer that would have allowed inflation to exist in Bitcoin and would have knocked some nodes online. So a pretty serious bug. And when I say, oh, it exists in Bitcoin Core, like, yeah, it was in Bitcoin Cash too, right? It was in all the forks of Bitcoin when this was discovered. So it was also affecting Litecoin. I think it was like maybe in Dash. But it was handled very professionally, or as professionally as you can when you have like an anonymous dev from one project tipping off people on another project. And that immediately went out. So I think that's kind of like one Bitcoin Core narrative busted. And the thing is, like, that happened the other way a few months ago. There was a Bitcoin Core developer found a bug that was a Bitcoin Cash, and the same thing, like notified Bitcoin Cash and said like, hey, you need to change this stuff. So the real takeaway from both those incidents, I think, is that competition has been good for everybody. It would have been very easy if Bitcoin Core was still the only Bitcoin and still had, say, 80% market dominance to not be looking for bugs like that. But when you're involved in this big political clash and economic clash and everything else, that's when this stuff gets turned up. So I think that's been useful for everybody, even though I think it makes some of the narratives fall flat. Another big narrative that Bitcoin Core pushed, especially last year, was this thing that nodes matter, like full nodes. Even if you're not mining, like, you need to be running a node because that's how you beat the statists and, you know, create this free economy. But that's changed a lot, because originally what happened when they first started looking at on-chain transactions and scaling by, you know, larger blocks and more transactions in the blockchain, there were projects called Bitcoin Classic and Bitcoin XT, and a lot of people started running those nodes. And then there was this big message saying like, no, nodes don't matter. Like, only hash power matters. Like, pay no attention to those nodes. And then right in the wake of the Bitcoin Cash hard fork, you know, there's that big user activated soft fork. You like wear your military hat and run your node, like one node, one vote. And that's still persistent. Like, if you're out there shit posting on Twitter anyway, like, you'll get into debates where people are like, oh no, like, it's nodes, it's individual sovereignty. That's why I like Bitcoin Core. Like, what are you talking about? Like, that narrative shifted. And to further reinforce that narrative shift, after this most recent bug was uncovered in Bitcoin Core, it was maybe a week ago. Today, I think it's only about 50%, I checked this morning, of Bitcoin Core full nodes that have upgraded, so are no longer vulnerable to this bug. And to me, what that says really is that 50% of the nodes out there don't really matter at all. People are like, oh, great, like, I'm running a version of the software that's clearly compromised and could create inflation and like nobody wants to use. They still don't upgrade those nodes. That means they're probably just like a abandoned Amazon instance, or, you know, who knows. But the myth of this like node warrior running this software, not even upgrading to fix these inflation problems, I'd say that that's kind of busted as well. Bitcoin Cash going up 20% today. Again, like, short-term price movements. It happens on Bitcoin Core. It happens on Bitcoin Cash. Like, both sides, as soon as theirs does better in price than the other one, they're like, hey, look, we're the real one. Look, we have more momentum or whatever. I don't think that those movements are too important. The one today, though, is probably, or at least whenever prices move, pundits get on there and say like, oh, well, this happened and then this happened, and you never really know if it's right or not. But today's price movement coincided with a company called Bitmain filing some of their paperwork for an IPO. And it's probably related, since Bitmain is a well-known proponent of Bitcoin Cash. And in part of their IPO following earlier, they disclosed that they hold something like 1 million Bitcoin Cash. So I think there could have been some market perception of risk, maybe with this company holding so much, and maybe their IPO wouldn't go through, or who knows.
Hmm.
But the fact that as soon as they filed some paperwork, you immediately see kind of this restoration and confidence of Bitcoin Cash is probably connected. And for better or for worse, right? I think there's some validity in the position of saying like, wow, isn't this kind of a big risk having this one operator hold so much of the currency? And the answer is like, yeah, there is some risk in that.
Mm.
That exists on Bitcoin Core too, depending on if Satoshi's still around or if somebody has access to a lot of those early addresses and early coins. So that's one of those things to look at and sort of make your own decision in terms of what you think is riskier. Bitmain, that was another just kind of narrative. It's like, oh, this scary Chinese mining company, they're evil. Like Bitcoin Cash is just this crazy Chinese scam because Bitmain likes them. I'd say that that's a narrative that's been pushed by a lot of people who support Bitcoin Core that I don't necessarily agree with. I think Bitcoin is a proof of work cryptocurrency, and you don't really get more proof of work than building from nothing a company that makes billions of dollars in profit per quarter mining cryptocurrency. That's a huge proof of work test. Like you don't get to that without taking certain risks and making certain judgments and being right about things. So the idea that like, oh, because this company is successful, you can't trust them. I'm not a big supporter of that idea.
Yeah. So is Bitcoin still, I mean, valuation aside, valuation in US dollar aside, is Bitcoin still the de facto currency? Is it still really the big dog on the block?
It's definitely still the big dog on the block. And, this metric that depending if it's politically useful or not, proponents of different sides use the dominance index is just the market cap of Bitcoin compared to the market cap of all other cryptocurrencies. And a few years ago, you got up to almost 90% with Bitcoin, pre-fork Bitcoin. And really, I would say not coincidentally, as soon as the Bitcoin blocks began to fill up and there was still a higher demand for on-chain transactions than Bitcoin was able to provide, you started seeing that dominance index start falling a lot, down to, I think the lowest it got was maybe 32%. And now it's been coming back up. I think it's over 50%. I think the market cap of Bitcoin Core is something like 110, 120 billion, which is serious because I think the next largest market cap is Ethereum at, I forget what it is now, but it's maybe dozens of billions. Nothing else is over 100. Recently, there was something about Ripple, like, oh, having a bigger market cap than Ethereum that for various reasons we don't have to get into here. I'm ignoring that.
Okay.
That's its own thing. And Bitcoin Cash's market cap is something like 8 billion now. There's definitely a big difference between a cryptocurrency with a market cap of 110 billion and a cryptocurrency with a market cap of 7 billion. Just in terms of liquidity, what it could be used for, the volatility you would expect in the asset. And with cryptocurrency in general, like I think that empirical history is very important as a determining factor of future value. Bitcoin Cash was absolutely a minority fork in terms of, you saw that with the price, you saw that after these chains split, and you still see that today. I think in the future, though, if and when Bitcoin Core or Bitcoin Cash is priced at $100,000 per, it will be for different reasons. If you see Bitcoin Core priced at $100,000 per, it will be because of continued speculation or institutional money coming in, or something on top of the Lightning Network controlled by a few key players who see some use to that business. If you see Bitcoin Cash valued at $100,000, it's not going to be because a lot of whale investors are spending $100,000 to buy one Bitcoin Cash. It will be because broad-based demand is so large that people are, a lot of people are buying $100, $200 worth. So this arbitrary distinction of 1.000 BCH or BTC won't have too much to do with it. I think that Bitcoin Core going forward, like they've said, no, we don't really want on-chain scaling. We don't want on-chain transactions. there's this trade-off between more on-chain transactions and security that even though we're never able to quantify, we will tell you that it's really scary, so you should just believe us.
Hmm.
And they'll keep going down that route.
Hmm.
I think Bitcoin Cash is really well positioned to capture a lot of demand for on-chain transactions, which has been growing across the whole cryptocurrency space. Today, Bitcoin Cash is relatively low daily usage in terms of on-chain transactions. So again, it's another battle to make it the most useful. And part of utility is what are other people using?
Mm-hmm.
So that's a promotional battle for Bitcoin Cash and a technical battle. You just have to make it better.
Yeah.
You have to make it more useful. And it is already, I mean, I would say better, but I'm going to say more useful in the sense that Bitcoin Cash has been proven up to 2 million transactions a day on chain, which is 5 times more than Bitcoin Core has ever done in a single day.
Wow.
And that also kind of, with Bitcoin Core being like, oh, well, no, you can't have too many on-chain transactions because there's this trade-off and it's too risky. Like, okay, well, what's the trade-off, right? Like by doing exactly this, there's not a risk. So we'll see both sides kind of jockeying around and seeing what's what. But I think the visions are starting to crystallize into competing camps of who thinks on-chain scaling is important and who thinks it's bad for various reasons. Most of the arguments that are out there between the camps are just kind of personal, ad hominem political stuff.
Yeah, of course.
I think the key difference is a focus on utility and a focus on speculation.
All right. So last question, I have heard that, that one particular personality, we'll call them, in the Bitcoin world and just in the investment world in general, saying, before the end of the year, Bitcoin's going to get to $40,000, maybe more. What do you put any weight in that at all?
Maybe. Who knows? I mean, I bet that guy has a lot of Bitcoin Core, so he's certainly interested in that price being hit.
Yeah.
And if him saying that makes it even a little bit more likely, I'm not surprised that he would say that.
Exactly.
It's easier, I think, for that to happen now than it was last year, even at the height of that bull market. Just because, what you don't see in these bear markets is that the infrastructure is still getting built out. Coinbase is still growing.
Mm-hmm.
These companies are still building relationships with banks. They're still improving their infrastructure and their ability to handle. If 10 times more people start using their exchange tomorrow than ever used it in December, they could handle that. I don't know if maybe that exact specific example, maybe not, but compared to where they were last year, if there were some major news event or some major occurrence or some major new use case where 1 billion people that have smartphones but don't have cryptocurrency decided for some reason they wanted cryptocurrency tomorrow, they could enter the market incredibly quickly and much faster than they would have been able to do so in the past. Now, if it hits 40,000 this year, it could, but the reason would be people are speculating that it's going to get higher.
Speculate.
It'd be for the same reason that it happened last year.
Yeah.
And people love speculating on things. That's great.
Yeah.
I hope they continue to do it. It makes me feel super happy when they do it on cryptocurrencies that I already own.
Right.
So awesome.
Yeah.
But I think it's difficult to call it by saying like, oh no, because it solves this specific problem and this many people need it to solve that problem now. And because this many more people will need it by December, we can expect it to be worth this much then. Nobody has real models or answers on that. It's just kind of speculation. And while I think that this type of base demand is increasing, I think it's still insignificant compared to speculative demand. So it's really hard to suss that out.
Yeah.
40K, yeah, maybe. 2K, maybe as well, right? It's and that's kind of always true. From my perspective, so many people were emailing me that I hadn't spoken to in years, last December, being like, Joey, Bitcoin, what's the deal? How do I buy it? And in the last year, only one guy who I'm good friends with, but I hadn't heard from him in a while, who's I'd say a pretty intelligent dude, sent me an email. He was like, "Oh, hey, I've been watching this. Looks like it's cheaper now." And I was like, "That's the guy who gets it, right? Like that's the one who's like, all right, like when other people aren't paying attention, now is probably a good time to pay attention."
Yeah.
And the thing that always grabs people's eyes is the price and the price movement and the bubbles and the vectors and people drawing charts and people making fortunes overnight. And humans have always been attracted to that. So I don't think that's going to change anytime soon. But that's also never something that's predictable or necessarily like, that's going to happen. I'd be fairly certain that even if cryptocurrency actual usage never really gets higher than it was last year for the next 5 years, you'd probably still see another crazy bubble like we saw last year just on speculation.
Speculation. Got it. Yeah.
But I would never try to say when that's going to be. Why? I mean, the why is just because people love to speculate on things and markets go in cycles. That's the why. But that doesn't give you a when. You could just say like, oh, well, more likely tomorrow than yesterday. Maybe.
Maybe. Kind of. Sort of. Awesome.
Some sites I would recommend, especially following some of the drama and the political drama coming into cryptocurrency. One's called coinspice.io. coinspice.io. They also have some great YouTube videos and highlight some of the personality conflicts and other clashes in cryptocurrency. I've started making some YouTube videos for my sailboat where I go into a little more detail about fundamental demand for cryptocurrencies, why Bitcoin Cash versus Bitcoin Core. It's a little bit more technical and probably not for everybody, but it's still good information.
So the best way for people to connect with you is?
I would say Twitter, just add Bites of Man.
Okay. And I'll link to all of that in today's episode show notes.
Yep.
Awesome.
Sounds great.
Well, Joey, thank you so much for coming on today. Dude, we appreciate it as always, and we look forward to the next update already.
Yeah. No, me too. It's always going to be more interesting, even if you never know what the price swings are going to be in crypto.
Yeah. Connect with and follow Joey on Twitter at Bites of Man. Again, that's at BYTES of Man, or through his site, bitesofman.com. Show notes, links to Joey, and other resources can be found by going to intherabbithole.com/E266. Get more survival goodness and help support the show. Visit IHRH.net to become part of the Roving Horde Armada. Hey, it's members just like you who really do help keep the lights on. If you're watching this on YouTube, do all that YouTube stuff. Like this video, subscribe, and slap that bell around because bananas are yellow. With that, we wrap up episode number 266 from the Lone Star State. Till next time, stay safe and sound.
West.